Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another episode of Zen and the Art of Real Estate Investing. And we're going down a new topic route today with 3V infrastructure, that's EV charging. EV charging is one of the most searched for and requested amenities for both apartments and hotels. In the not too distant future, this amenity will be as ubiquitous as Wi-Fi. That's why we're talking to Ben Canner of 3V Infrastructure now. This is episode 299 of Zen and the Art of Real Estate Investing with my guest, Benjamin Canner. Benjamin is the COO and co-founder of 3V Infrastructure. 3V is an L2 investor built to create a long-term, reliable EV charging solution for portfolio owners. Ben, welcome to the show.
Thank you, Jonathan. Good to be here.
Yeah, this is a great topic and something I've been personally interested in, but I want to get the background and the scale. But I want to start first with how important is it for large scale property owners and commercial investors to pay attention, at least right now, to EV charging solutions?
I think it's obviously I'm slightly biased, but
yeah, really teed it up for you there.
I'm not sure if I would have I like the number 299. I mean, that's a good number. I'm not sure if I would have preferred 300 on the nose, but 299 is pretty good. But yeah, obviously, I think it's very important, for a variety of reasons. Number one, whatever you see in the media, EVs, the train has left the station, the car has left the garage, whatever analogy you'd like to make. But, what we saw, and there's a few other factors that are driving this, but what we saw is the percentage of EVs sold in the United States surpassed 10% in the last quarter. So, and that's up from, I think it was around 7% at the end of last year. So people are buying EVs. Now, obviously, the tax credit going away, things of that sort, there was kind of a rush at the end, but definitely there are, regardless of, what you want to attribute it to, there are more EVs on the road. That means that with 30% of people living in multifamily housing in the United States, there are more renters with EVs, and we like to charge our EVs just like we like to charge our phone when we're sleeping at home. So, by virtue of that, it definitely behooves property owners to have this amenity. And generally, we've seen actually, and I can cite some numbers around this as well. Renters will actually pay more if they have a charging amenity available to them where they live, right? So for all those reasons and many more that I'm sure we'll get into, yes, I think it definitely is something that multifamily should pay attention to.
Yeah, I like the analogy with the phone because that's exactly what I was thinking. It's like if you have an EV and you always have to charge on the road, it's kind of ridiculous that you wake up every morning and you're on a quarter charge or something. That's the annoyance of, not having 1/8 of a tank full of gas when you wake up. Exactly. And that's the whole point of having an EV is to avoid that. And I guess procedurally, it's not that difficult to get done, but you definitely need experts to consult with to figure out how best to do it. But overall, it's a win for everybody. Win for the tenant, as you said, and they're definitely going to be willing to pay more for that super convenience. Win for the property owner, large scale apartment owner, because they're going to get more rent, better ROI, and a happier customer.
100%. And yeah, I mean, to your point, with the transition to EVs, societies the way that we interact with fueling our vehicles, and again, charging an EV is just, it is fuel, right? It is the same as fueling, putting gas in your car, not the same, but it is, synonymous with putting gas in your car. And, we believe fully that, society is going to change the way that we fuel our vehicles. Now, there definitely is still the need for superchargers for the gas station model, but it is highly convenient to be able to do that at home when it is available to you. When you're going on a road trip, or if you're an Uber driver and not, need to fuel in between. Obviously, we need to have that kind of similar gas station amenity, but generally, fueling at home is the most convenient way to do that.
Yeah, I mean, just imagine for all of us who still, drive cars with gas, that if you could come home every night and somebody would just fill up your tank while you're sleeping so you're full every morning. I mean, that's a really big perk, because you may be in a rush or something, or you come home with no gas, and then, someone's having a baby, you got to get out the door. There's so many different emergencies where this could really help, that it's really interesting. And I think I know you guys are working at scale, but it really applies all the way down to your regular 2-family owner, 3-family owner, 4-family owner, because they want more rent too. Do you see this as applicable to small scale multifamily as well?
Yeah, I think it's applicable to everyone. It's a question of what are the demographics that are in your buildings. Obviously, currently the cost of EVs is slightly higher, although it is coming down significantly. So, it does kind of cuts both ways, right? It's that, higher demographic people are generally going to have more EVs, but at the same time, you could potentially attract higher demographic tenants if you have that amenity and demand more rent for those. A tremendous, on that point though, there is a very big push from the car manufacturers in order to get a much lower cost EV. I hope one day that we will get access to the Chinese EV market, meaning the cars that come from China, BYD, things of that sort. But even before that, Ford is pushing to come out with a less than $30,000 vehicle. Many others are pushing in that direction. And then we don't even talk about the secondary used market, right? We've kind of got to this point where there's going to be a ton of used EVs coming onto the market. So the price point comes down, more people are able to afford them. And again, that kind of changes that accelerates, I guess, the adoption even more.
Yeah, I mean, that secondary market's going to be really important, because your long-term or lifetime usage of an EV should be longer. I mean, I don't actually know what the studies say, but I don't know that things will last forever, but it should be longer than your traditional car, which racks up miles, and then, has so many things that are inside that are going to break down, that some parts are not involved for the EV.
Yeah, we can talk a lot more about that, but it is much more modular, I guess, as they build them. And that's even, it's really interesting. If you or readership haven't looked at it, Ford came out with an article a few months ago about how they've actually reimagined their production line because of the ability to have modularity in the EV production, and it brings down costs. It makes it shorter, and they called it the next Model T moment, right?
Yeah, was that
T moment was when they actually had the original lines, and now this one is kind of reimagining that production line, and it's the next Model T moment. So costs are coming down. Generally, it costs less to for maintenance on EVs. Again, it's much more modular. They're figuring out, how to just replace the batteries, because that's really the component that is the technology that's accelerating so quickly. And, you talk about like a Moore's law type of a thing, right? Where, it's just exponential increases in that type of technology. The batteries really, where that occurs. So getting new batteries into these older models. And then you don't even talk about the fueling itself. You're getting me going.
No, keep going. I mean, it's all part of the same discussion, because it applies to, obviously cost differential that's going to play across the whole thing. And I think one of the things that's so important that you said in the beginning is you're tracking, what the sales look like. So of course, we all know that there's EVs out there, but if it's continually going up and we expect it to go up while prices come down and your lifetime usage gets better, it's obviously going to keep going in that direction. So to stay ahead of it now and to inform everybody, hey, this is something you want to put in now and not just one or two, plan a little for the future so you don't have to keep building on.
Yeah, absolutely. And again, if we just to kind of round out that total cost of ownership, it definitely varies. By if you live in California, it's obviously more expensive to fill up your car, whether that's with gas or with electricity. But on average, it actually costs, to drive 100 miles, it costs on average to $12.80 in an ICE vehicle, so internal combustion engine vehicle, and $5.26 for an EV. So we can see that generally electricity is cheaper. Obviously, that makes it cheaper to fill up your vehicle and thus drive in an EV. You had made a point remind me what the last thing you just said was, because I didn't want to address that as well.
It's the cost differential spread for the lifetime thing for the lifetime of the car.
Right. And you had mentioned, getting chargers into properties. Yes, absolutely. Right. I mean, even if you don't have, what we see is, and the way that we underwrite things is, and just to give a little bit more background on 3V, we are effectively an infrastructure investor. So we put up all the capital in order to put in EV chargers in primarily multifamily. And we have a different model than most of the other folks out there. We have found infrastructure capital, and my background, I come from, real estate originally and then project finance. And I saw this and said, this is a very project financeable type of investment. Now, project financiers are generally risk averse, right? So we had to go find the right capital and say, hey, if we put up what we do at 3V is we put up all the capital. We own the chargers in multifamily properties. And then, we make sure that they're working all the time. We do all the operations and maintenance, and then we'll actually add more chargers as utilization. So as we see that the utilization on the chargers warrants it, we'll actually put more chargers in. The way that and I guess the specific differentiation in our model is we're putting up all the capital, and the way that we make all the money back is we actually put just a margin on the electricity cost. And then we only make money if people are actually charging. And then icing on the cake, we're taking most of the risk. We're putting up all the capital. The property owner doesn't need to pay us anything. We will actually profit share with the property owner when the economics allow it. So that being, the other models out there are generally charging as a service, which means that they might put up, a company might put up all the capital, but they're going to charge the property owner or the counterparty some sort of a monthly fee, right? And really, it's just underwriting the credit risk of the counterparty. We actually are coming out with a charging as a service product for other property types, but for multifamily, we can do this no cost option, which I truly believe is the best option out there for the property owners. And we can do this at scale across large portfolios. There's a few other players in the space that can do it on a smaller scale, but we actually can diversify risk across many properties, and that actually allows us to give better terms to those property owners because of that risk diversification. So.
Yeah, the model's very interesting, but also goes to something we were talking about briefly, that if you're evaluating a new, multifamily property, however, they have 200 units, say, you have to evaluate really how many you need, so it's cost effective for you to put them in and them getting used. So because you can put in more, you don't have to say, hey, let's put in 20, even though people are only going to use 8 for the next 3 years, because that would kind of be a waste of resources, right?
That's exactly it. You hit the nail on the head. And that actually is where my long sermon just spurred from was, we look at it and we actually kind of, I wouldn't say we build small, but we build to the moment. We'll put in, generally some markets will put in many more, but we'll really put in 4 to 6. And we not only want to be, the investor and the partner to property owners, but we want to be their advisor, right? I mean, the EV market is changing all the time. Real estate folks should focus on buying and selling real estate, and we can come in and help advise on this amenity and make it the best amenity possible for their residents.
Yeah, I mean, you're really taking the kind of analysis paralysis off for the large scale apartment owner, because they don't, they don't have to put anything out. It's usually, what's this going to cost me? Nothing.
Right.
Well, do I have to put it in? No, you don't have to do anything. I mean, and then the benefits are there. So obviously it's a great pitch, but they have to, the fact that you can reward, both on the way is really important. And then for the people to get benefits, I wonder, as this gets along further and people have records of how many cars they have, when you go to a new account, say again, 200 units, and they say, we have 7 EVs, and they say, wow, okay. If there's 7, we can put in maybe 4 or 5, knowing on the usage rate who's going to need it when. It feels like that data will be available in terms of the cars available on site, so you can really pinpoint what's going on.
I almost call it, we do ask for that when we're working with new clients. I almost call it a car rent roll. I'm like, if you
Yeah,
can provide me
exactly.
with a car rent roll, I might be able to put in more stations. And that's what we want. If we don't have that, it's okay. We'll put in some. And really, I mean, a lot of this it is still a nascent market. So we're building ahead in a lot of
Yeah,
circumstances.
yeah.
We use a lot of data, and we can even get, EV registrations at a very localized level. So we kind of know, and really we look at multifamily as like a microcosm of a
Right.
bigger
Percentage of
area.
the population, percentage of the
Exactly.
complex. Yeah.
Exactly. So, but even if, there are no EVs on day one, we model so that, we probably aren't going to see charging on day one, but we will start to see it as people get word of it. And then it also becomes kind of a, keeping up with the Joneses, right? If
Yeah.
your neighbor buys the next biggest big screen TV, right? There's a lot higher probability you might go down to Costco and get one yourself, right? And the same
Yeah.
thing with EVs, right? You start to see that, kind of flywheel start to happen at properties where you get a few drivers and a few more. And again, with our model, we're not just talking about we drop them and, set it and forget it. It's we're monitoring that very closely, because we would love to put more capital to work. As soon as
Yeah.
we can prove that out with utilization, we'll go ahead and drop more chargers. And that's good for the property owner as well, because, if you are an EV driver, you pull up at night every night and there's no charger available, that's a bad experience,
Yeah.
right? So we're incentivized to make sure that those, in a number of ways, but also with that the tenants are having the best experience possible with the chargers.
Yeah, I can see it as a big win for people who are overhauling, multifamily properties, waiting for people to move out, and then they have, say, like you said, maybe there's no EVs in there now, but as they start renovating units and then putting them back on the market, their new pitch is now going to involve, hey, we have 6 EV chargers, and now all of a sudden you're able to upgrade the clientele coming in some ways, to give them that opportunity as you're redoing the thing, because a lot of people are doing redos as they go. That's
Yeah.
another great perk, just like adding, a couple office spaces and other opportunities and amenities out there. This is just another one, but it's so built in and tied to the actual transportation where people have to get every day, that it carries more value, in my opinion, than a pool. Pool's nice, but it's not getting you to work.
I like that. I like that. And I like that. I might use that.
Yeah, sent. Take take it from me. We'll pull that clip. Yeah, it's interesting. I mean, so how did you get into the EV market? Because I know you had a background, of course, in all of these things, but when did EV come on the scene for you? And then how did you tie it so quickly into real estate?
Yeah, I mean, I will start way back, because I do think this has kind of become from a winding path. I've kind of come back to the beginning. I started my career in commercial real estate, working for Deutsche Bank, and ended up uh, ended up going back to business school. It was the great, recession. Wasn't necessarily losing my job, but couldn't go up, couldn't go
Yeah.
sideways. There wasn't a lot of opportunity. Went back to business school. Ended up staying in finance, but moving into project finance, and was working for Rabobank, actually, in the renewable energy infrastructure team, doing big wind, solar, biodigesters, things of that sort. 40-year cash flows kind of blow my brains out. But, and then I ended up jumping into entrepreneurship and really doing nothing related to energy or real estate or anything like that. Because I enjoyed it and wanted to be an entrepreneur. 2 software startups later, still investing in real estate personally, because I love the asset class. I sold my last company and said, well, is there a way that I can, don't have any good ideas to start another company yet. So, can I find something that is kind of the intersection between commercial real estate and, and software really.
Yeah.
I kind of, was in a very beneficial situation where I had time. I took a year off and really just kind of had conversations and saw what was out there. And there was a lot going on in the space at the time. And so, by looking at that, I kind of stumbled on EVs and I realized this EV thing was cool. And actually, one of my friends who was then at EV Go and and actually went to Uber, who now actually works at 3V, had said, "Hey, dummy, there's a big technology here, EVs, and it is a big intersection with commercial real estate."
Yeah.
And so ended up going to work for a company called Loop, which was a EV charging hardware and software manufacturer. And in there, I, did a few different things for them, but realized, we could sell a lot more hardware and software if we had financing partners to help, because a lot of these property owners, see the benefit of an amenity, but they don't necessarily want to pay for it themselves. And so based on that and based on my past experience with project finance and with real estate, I realized that, hey, this is really something that looks and smells like a project financeable type of investment. The only problem is it's a little bit nascent of a market, and you really do need to be able to show the ability to have recurring cash flows and predictable cash flows. And so, then it kind of just became do you think we can, raise a fund, do all the things that we need to do in order to do this? And luckily, having spent a bunch of time in finance in New York, I knew a few people to call and, we were able to find the right investors that really taking infrastructure capital and applying it to this, because there definitely has been companies, especially EV charging companies, that have done this historically because they do want to sell more charging hardware and software. Unfortunately, they've used venture dollars in order to do it. And that's just a mismatch of capital, right? And so, really finding those infrastructure, patient capital in order to do this was the key to unlocking this, I believe.
Hey, it's Jonathan. I hope you're enjoying this EV episode with Benjamin Canner. And on this brief interlude, I wanted to alert you to a couple new things with the podcast. The website, zenandtheartofrealestateinvesting.com, has undergone kind of an overhaul with design, added some new features, added the events page, and also on the front page, the home page, you can see a countdown to the next real estate investing event in New Jersey. But if you haven't gone through the site, one of the coolest things to do is to go to the site, zenandtheartofrealestateinvesting.com, and look in the guest directory. You can search alphabetically. You can just plug in someone that you hope was on the show if you just started listening, and you can find all the guests. I hope you're enjoying the podcast as we roll very close to episode 300. Let's get back to the show with Ben. Yeah. So, when you're looking to connect to a client, is there a number of units in an apartment complex that is too small for you guys right now?
Less than 100 becomes difficult. And really, it's just a factor of numbers. Because if
how many stations do you need? That's what I was thinking.
Yeah, like you got 100, and it's not exactly this math. There's a little bit more that goes into it because there's more drivers than units potentially. But 100 units, 4% of the drivers are EV drivers or whatnot. You got 4 drivers, right? Maybe you get one station, in there for 4 drivers, maybe 2, but it becomes tough. If there's less than that, you never know. So but that to be said, if it's 100 units in Hollywood, probably can do it, right? So it's very market specific. Again, we underwrite and we have, these amazingly complex Excel models that I can't even use these days. It's kind of use it or lose it. But, and we enrich all of, like, I'll get a property list from a portfolio, I'll get a property list, unit counts, all these things. And then we really enrich that data with a lot of EV data. So as I mentioned, EV, registrations, EV penetration rates, adoption, and then we put even on curves, in terms of what we think is going to happen. And it's a very localized level. So, we can get pretty specific in terms of how many chargers we think should be at a property. And then, as you mentioned, if we have other even more beneficial data, like a car rent roll, we can even get more
Yeah.
specific. So I think rule of thumb, probably less than 100 is tough. But again, if you're in Silicon Valley or something like that, it might be feasible.
Yeah, you go from 4 to 40 pretty quickly.
Exactly.
Yeah. So, what's the applicability? I know you said you were looking into other commercial assets, but what's the? I know obviously retail. Outdoor malls probably have it available, but what about your commercial properties? I guess it's tough now because office buildings are kind of down in occupancy, so it seems like almost a bad play to throw it in the macro. But if office buildings were to come back, at least in terms of volume of people going back to work, would that be an opportunity there?
Office is an opportunity. So we look at like what we consider long dwell properties. So the key ones that we'd look at next are hotels, because that's kind of similar to
Yeah.
the, multifamily field. The tough thing about hotels is you're not quite sure who's driving there, where they're at, so there's a
Right.
lot more variables. It's not quite the microcosm of a region like a multifamily is. Hospitals are really interesting because they not are only kind of like a hotel where people stay a long time, but
Yeah.
they're also an office component, but those office workers stay a long time as well. Office is tough because
Yeah.
you're not sure, are they going to come, are they charging at home, or are they going to drive to the office and charge? Are they going to come down at lunch once their car's finished charging for half the day and move their car?
Yeah.
Probably not, right? So
Yeah.
it's a little bit more variables. Again, we are coming out with a charging as a service product as well, where it's much more applicable, because really then it's really on the counterparty, so the property owner or even an office tenant, if they want to offer that as an amenity to their employees, they can do whatever they want, and as long as they're paying, we're happy to manage it and to do all the things and give them all those benefits as well.
Yeah, it made sense what you said though, because I feel like, okay, now that I'm thinking about it, if you own a home, let's just say for homeowners, you probably are, I don't know what percentage, a good percentage are putting that EV charger in at home. So they don't really need it at work. The
Right.
whole point of having electric is not to have to charge up just by going to work, unless you're going a super long amount of distance. But yeah, I guess, that's why it makes so much sense for multifamily, because they're renting, there's not an opportunity at work. And I don't have an EV, but I just still assume, at
Well,
least in my
we got to get you there, my
yeah,
man.
I've looked. I honestly looked. It was hey, you put the deposit down and it's going to be this amount, and then when it comes ready, it was this amount, and they weren't
Yeah.
close to each other, so I passed on that. But yeah, it's going to be interesting to see where it grows and what people need, because I don't know. I guess it's available, or people would be complaining about, but I don't think it's as easy to find. It just seems like, if you don't have one at home and you don't have one at work, you're pretty much going to have to know where it is along your route at all times.
Yeah, I mean, that's the big thing, is that, people are talking about range anxiety. So we are very focused on level 2 charging. And just for everybody that may not know, level 1 is literally like an extension cord.
Right.
Worst case scenario, right? Level 2 is, 240 volt outlet. Basically, it's like plugging in a dryer in your home.
Yeah.
It'll charge a car, if it was at zero, and usually we're not at zero, right? But in like 6 to 8 hours. So it's really perfect for overnight for
Yeah.
long dwell situations. And then the fast chargers, the Tesla superchargers, things of that sort. That's level 3. That's DC. That'll charge a car up to 80%. And generally you want to just charge it to 80%, unless, you're, anyway, we can talk a lot more about that, but that'll do it in, 20, 30 minutes potentially, right? That's a lot of electrons being forced into the vehicle. So, yeah. So, again, there is definitely the time and place for those level 3 chargers. And we actually love people that are building level 3 chargers, because it does get what we call range anxiety. People are always like,
Yeah,
well,
yeah.
if I go too far, am I going to be able to,
Yeah.
fuel the
That's what I
car?
think. Yeah.
Right. So, we love people that are building level 3 chargers, but again, our thesis is really around, level 2 and helping people charge, where they spend a lot of their time. And a lot of times that's at home.
Yeah, well, let's talk power a little because I mean, obviously, there's so much out there about data centers and power shortages that we're going through. How does the EV help or hurt the potential power shortage with what we're doing with AI and all these other things that are really want to soak up power?
It's a great question. This is going to be a Ben opinion. This is
Yeah,
not going
yeah.
to be
I don't know that we
a
know the answer, but
right.
it's coming up all the time. I read about it a lot because I'm very interested, and I'm kind of curious as I see especially what other countries are doing, and they're way ahead of the curve with
Yeah.
power, and we're not.
I mean, I think positive, like EV and, previously to AI and to these massive data centers and things of that sort. Yeah, sure. If you're going to put in a Tesla supercharging station, and it's amazing what Tesla has been able to accomplish, what a lot of people have been able to accomplish. Now there's
Yeah,
a bunch of, um, a bunch of other ones that are, as good, if not better, in terms of charging networks. But when you're putting in a bunch of few megawatts of chargers into a location, I mean, getting an interconnection and things of that sort, was a real big deal, and that's sucking a lot of power off the grid.
yeah,
Now that is minuscule in comparison to what
yeah,
these data centers are doing. I
yeah,
mean,
yeah,
they're literally building bringing
yeah,
nuclear reactors up online too. So I think, overall, I mean, the whole thing is only going to help, the electrification goals of the country. We have to bring the grid up we have to modernize the grid. We have to do all these things in order to make sure that, from an AI perspective, even, that we are able to sustain the amount of electricity that's being demanded, right?
yeah,
Only going to help the EV space. Again, I think it's a drop in the bucket. So, I think overall, if there is an electricity shortage, we're all having problems. Doesn't matter if you drive an EV or not. Like
right.
that's going to be a societal issue, and that's some of the stuff that people have. I think some of the risks that people have kind of highlighted. But overall, I think it pushes us to electrify more quickly, not only in our vehicles but in our homes and things of that sort.
Yeah.
So I think it just pushes the whole electrification and grid resilience to a whole different level now.
Yeah, and obviously there's a positive environmental impact from not using so much gas or being so reliant as a country on just gas and the cost that rises. When you show up one day, oh, whoa, it's 5.80 a gallon. That was fun.
Right.
That's not there. So it's interesting what's going to happen with that.
Yeah. And I mean, one of the biggest things with the EV space is, as we were talking about before, it's a little bit of Moore's law with, I think I've got that right. Isn't it Moore's law with software, like
Yeah. Yeah.
exponential? Yeah. Moore's law with the batteries, right? And so it just as battery technology continues to get better, and range continues to get better. I mean, that only, helps the cause and makes these things even more efficient. So
Yeah, and it's quieter.
yeah,
It's funny though, you don't realize it, if you're not dealing with EVs a lot, that it just goes by and you're like, was that just a car? I still feel like I'm kind of like a boomer in that because I haven't, I've only driven one as a test drive once, and it's like, wait, it really doesn't make any noise. Okay, this is unusual, but that's an ancillary benefit that people don't think about when you think at scale, like you guys are thinking at scale. It does make a difference. I mean, all of this stuff makes a difference in your kind of enjoyability.
I mean, I will say, and you should go get another test drive, because I was a truck driver, or I drove a truck for many years, and even I bought a new one right before I got in the EV industry, and then I was like, oh, what am I doing here? And
Oops.
so now, as my CEO says, I'm a statistical anomaly, and I went full EV, 2 EV household, so I've got 2 different ones. I will say that no matter what type of EV you're driving, it is a better driving experience. I
Yeah,
mean,
yeah.
the torque, all the stuff, but also it's basically a computer on wheels, right? Because it can just handle that much more or electricity output and all the things. So, it really is a better driving experience, no matter the model that you're looking at.
Yeah, and I think that's part of the reason why you guys are staying ahead of the curve and encouraging these large scale apartment owners to stay ahead of the curve, because it just seems like it's going to be an all around win win. There's not really a tremendous amount of downsides that anybody's talking about with EV. It's just really getting them to a price point that makes sense where they're accessible to more people.
100%. Here,
Yeah.
here.
Yeah, but it was funny though, because when you were giving the Ford story, I was like, oh, funny, this article comes out from Ford, the inventor of the assembly line, and of course they're going to be out there trying to figure out a different way of modular building as well, which again
Yeah.
plays into real estate. Modular houses have become much more important because they can, you drop the foundation in, house goes up a lot quicker. So it makes sense to fit that to the car model as well.
Yeah, I mean, it's very interesting. And again, I don't want to go too far down this rabbit hole, but the whole thing with the EVs and Ford is it's now becomes this, instead of a straight line and they kind of bolt things on as it goes down, it becomes this kind of tree with three branches, and they start the back, the middle, and the front all on kind of at a parallel path, and
Yeah,
then it merges together.
together.
And because, the front and the back both have their own motors, and the middle's like the battery, you don't have to have a drivetrain or anything really that goes through the entire vehicle. So you're
Yeah,
able to build it separately and then bolt the three things together, at one stage in the process. And it also cuts down, I mean, I don't know what it was. It was like, you have a million, 1,000 miles worth of wire, and that cuts it down to don't quote me on this, 200, miles of wire now. And, all these things that you don't think about when they're actually building a car so yeah, it becomes more efficient. Again, with that, you can get the cost down, and, it's more accessible to everybody out there in the world.
yeah. For those who own whatever it is, multifamily from 2 up to 100, and maybe not the right avatar for you, what solutions are there for them? And is it a good idea, even, because it's not at the scale level, for them to look into it and figure out how to, pay for it, who pays for it, where they're putting the electric, because if you have an apartment complex of say 50, you're not going to know who's charging at what thing and be able to put it to their, unit number 22. At least I don't think you can, because you're going to want to share the chargers. So it's something for them to figure out in terms of how to assess that cost, right?
Yeah, so our model, as you've kind of alluded to, does require us to have shared parking. So we can't do this no cost model in dedicated
Yeah,
spaces,
right, right.
primarily because you're not going to see the utilization. We need a number of people to be charging, over the week or whatever time period in order to make that make sense. So uh, if you have dedicated spaces, there's obviously charging as a service. If you had a smaller number of units and it wasn't in, a very, very high EV adoption area, we could definitely do charging as a service where, again, you just pay a monthly fee. If you didn't want to do charging as a service and you wanted to own it, obviously you can do that.
Yeah, yeah,
I would be happy to advise on that and put you in touch with, some of our best partners, both on the software and hardware side, as well as on the EPC side. There are still a lot of subsidies out there. So, we are not relying on subsidies. We will obviously go get them
yeah.
if they're available, because everybody likes free money. But it might take a long time. And that's one of the reasons is we build at scale, we build quickly, we build efficiently, and we build nationwide. And so we do not need subsidies in order to get started. We will go get that after the fact. If it was a cash constraint for a property owner, they can go and see if there's subsidies in their area. Southern California has some great ones. Colorado has some great ones. Yeah, so I mean, they're still available across the country, and that's obviously a good option for folks if if capital is a constraint.
Yeah, I wonder if you'll see what I call the washing machine theory happen. Like, so if for people who don't have washing machines and then they have a friend who has a washing machine, they say, hey, come on over and use my washing machine. And then all of a sudden the water bill is going up. I don't know if that would affect you guys because it helps to have more charging in terms of that shared billing cycle. But would you see that happening? Say there's 4 EV chargers at an 100 unit, and there's only 2 EV cars there, but all of a sudden there's 9 EV chargers a week because people find out about it. Is that obviously it's a hindrance to the residents if they can't charge when someone else is there, but would that affect you guys and the relationship between you and the apartment, or would that actually help?
Well, technically it would help us because there's more
Yeah,
people
that's what I was
charging.
thinking.
We do, our model is we fully anticipate that everything that we put in a multifamily is behind the fence,
Right,
whether
right.
that is a
A
physical
gate or
fence
not.
or
Yeah,
not.
yeah,
But there are some locations, and there's some of our best locations where it's attached to like a retail, it's mixed use, attached to retail,
yeah,
whatever. And they don't mind if others are coming
yeah.
onto the
It's
property.
perk. Yeah.
But generally, yeah, I mean, you don't want, you want it to be an amenity for those residents that are living there. I would say, and I thought where I thought you were going with this is we actually do reimburse for electricity from day one. So even
Oh,
before we
okay.
bring up a chair, we're reimbursed. I did fail to mention that, but we reimburse from day one. So it is really truly no out of cost or out of pocket costs for the property owner. We really want to make it as much of that as we possibly can. The thing that we have seen actually historically and recently is people, a lot of property owners saw this as an amenity and they were like, well, I'll just give away the charging. It's like, well, are you giving gas away at your property?
Yeah, yeah.
Probably not, right? So
Right.
now a lot of folks, especially the larger property owners, have kind of wised up to it and
Yeah,
said,
yeah.
we had one partner that I think we were losing like something like $500,000 a year across their portfolio
Yeah.
because
Only need to
they
see that one cycle to say, yeah, I don't think that's
exactly.
the
They had
best
just
idea.
been giving away charging at some of these properties. And so, now they realize, and you do have a little bit of tenant pushback
Yeah.
initially because they're like, well, I was getting free charging and now I'm not. Well, are you getting free gas? Like,
Yeah.
it's the same thing.
Well, that's
So
what I was thinking though. I was thinking how cool it would be, if you're at a complex and your friend comes over and you're like, oh, this spot's open, you can charge, as if you'd ever be there and be like, hey, you want to fill up with gas? So let me just go in my backyard, I'll top you off. Like,
yeah,
it's kind
exactly.
of interesting though that the process of how you use your car will change so much over time. I mean, obviously in our lifetime, it'll change X amount, but like in my kid's lifetime, I'm already thinking like, I wonder that kind of trade-off is going to be interesting because that shared utility, if the costs are okay, is going to be there for people to really, just give someone a break. Like, hey, yeah, you can use my charger or use a development's charger. Yeah, it's interesting. There's a lot of things at play that I think people don't think about that is just going to be more progressive, obviously, as the years go on. And obviously, with each administration, the credits for stuff like now, the credits are going away. They could come back in the next cycle, and then there could be a big difference for that as well.
Yeah. Yeah. And I mean, it was interesting. I was talking to somebody in Canada today, and I don't know the Canadian market very well, but I was asking, he made the point that, in a lot of countries, things in the US tend to get very politicized on the
Yeah.
left or the right, right?
Yeah.
And so, I mean, at the end of the day, I mean, I don't really talk about sustainability. I don't talk about it. This is a good amenity for
Yeah.
property owners to have.
Right. Right.
It should not be a contentious left or right issue. Like,
I know. Yeah.
and it's
It's like
as a car
it's useful.
driver, exactly. As a car driver, it is a better driving experience. I
Yeah.
will put that hands down, so again, I think that, obviously all this is in cycles, but eventually I think we'll not be talking about, whether this is a left or a right thing. It's going to
Yeah.
be just a thing, right?
Yeah.
So
Yeah. Yeah. Awesome. So, I mean, of course, you're obviously willing to help other people, pointing them in the right direction. But who's the type of person who should contact you guys if they're interested? They have 100 units or more, right? And they think this sounds like a good opportunity to enhance their property with this.
yeah, I mean, we talk to definitely folks that, have, one or two properties. Our sweet spot is really large portfolios and,
Yeah, because then you can they get it. They can go over 6, 7, 8, 9 properties. Yeah.
yeah, exactly. And I mean, for us, again, a big selling point for our investors, even coming in at an early stage in this market was, well, we can diversify risk, right? It's not about one property. It's not about 100 properties. It's not even about, 400 properties. It's about aggregating all these properties together, thousands of properties. And so, if people have larger portfolios, I can generally, give them better terms because
Yeah.
again, it doesn't rise and fall on any one property and they just don't like EVs at that property for some reason, right? It's really diversifying the risk across a larger portfolio. Yeah, that's kind of the sweet spot is, few, probably 100 plus units. Generally you can think about, where are some of the, top 50, call it markets in the US where people would potentially have EVs. The larger the portfolio, the more, we can kind of get creative on terms and things of that sort.
Yeah. And are you still actively raising for the fund that actually funds all of the construction for the projects?
As an entrepreneur, I tend to always be raising money.
I was
But,
about to say the answer is yes. Yeah.
truthfully, no. I mean, we are not actively raising capital. I mean, one of the theses of the original amount that we raised was, we have to kind of get the data, right, and show that
Yeah.
these are predictable cash flows. That being said, we are actually deploying, and I won't say burning through because we do not
Yeah.
burn. We are not a technology.
That's a
company.
gas thing anyway.
Yeah, exactly. There you go. Right. See what you did there.
Yeah.
No, it's we're putting more steel in the ground more quickly than we anticipated because of some of the high quality portfolios that we've been lucky enough to partner with. So by virtue of that, we will be looking to raise more capital again because if I'm deploying capital at 20+% IRRs, like people are interested. So. We're going to be looking to raise and deploy more capital more quickly than even we anticipated in our original underwrite.
Yeah. And is the best place for people to find you guys at the number 3V infrastructure.com?
That's it. And if you want to go BKANNER at 3vinfrastructure.com, you can give me a shout directly, and I will do my best to get back to you as quickly as I possibly can.
Yeah. Awesome, man. Well, I really appreciate it. It's been an interesting show. Again, we're at 299 and we've talked, obviously we've done some EV has fallen into the mix, but never a show directly on EV and the impact that it can have for apartments. So really appreciate you spending the time. I enjoyed it.
Thank you, Jonathan.
Yeah. All right. That was Benjamin Canner. He's the COO of 3V Infrastructure. Again, you can find them at the number 3vinfrastructure.com. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 300. The milestone of Zen and the art of real estate investing. And you're stuck with me on a solo episode. I had a lot of designs on bringing in multiple guests, but instead I did something different. I went into ChatGPT and I asked it for 10 questions that would help real estate investors succeed in 2026. And it's not for baby investors, I can tell you that. It was really interesting how it turned out. And that's episode 300. You and I, with me, having a discussion direct with you. And it goes into a lot of past episodes, future episodes, the plans for the podcast. It's a milestone episode. Thanks so much for listening. And I hope you listen to episode 300. See you then.